Citigroup economists say banking stress contained. Apollo's Thorsten Slock says the credit crunch has started. Is it one or the other, Pete, for you?
Well, it is, I think, a little bit of both. I mean, the banking crisis has been contained, given that there's good access to liquidity, and the strongest banks, both in the US and in Europe, have very strong capital positions. So nothing like the situation we were seeing during the financial crisis. But nonetheless, particularly in the US, you are seeing a big pullback in bank lending, particularly in mid and small size regional banks. And that is going to have an effect of tightening financial conditions for a large part of the economy, given that smaller companies rely disproportionately on loans from that part of the economy. So I think the big question is what spillover this really has to the real economy, and does it avoid a recession? Our view is it does, but I think the market, to Tom's point, is very much already pricing in a soft landing and quite a lot of optimism. Remember, the first quarter, the US was up 7%, the strongest we've seen at the beginning of any year since 2019. So I think there are still risks for the market.
And Peter, also pricing in some profit headwinds to the financials as well. That was a sector, Peter, that for a long time you've advocated for. We saw that big move off the bottom last summer in European banks. You were talking up that sector for a long time. What are you advocating for now, given the developments of the last month?
Well, in Europe's case in particular, and we've been overweight of Europe and still think that non-US markets offer better value, and they're generally doing better, and I think that can continue. We like the banks in Europe. We like the deep value sectors, banks, resources, and oil sector. They all had a fantastic year last year as rates rose and the fundamentals improved for them. They've had a very difficult start to the year, but they remain very cheap. On a relative basis, they're as cheap as they've been at any point since the financial crisis, if not cheaper, and the fundamentals are a lot better. We've been pitching that against the kind of barbell of having also a focus on what we call the granolas, the big defensive 11 companies that dominate the index. They make up about a quarter of the European index. And we like in the US as well, strong balance sheet, stable margin businesses, which again are quite dominant in the index. And I think that's one of the reasons why at the index level, things have been holding up quite well. The biggest companies are quite defensive.